Hey traders, Raghee here, and in this recap video, we're going to cover the Dow. Now, yesterday, I'm going to go back to Wednesday, that sell-off that we had on Wednesday, that dramatic move, and part of what we were doing with this move was, it almost takes us back to even the preceding session where we had the long position, we were managing that trade, and then all of a sudden, things went south, and then we started to look for an opportunity to get long. And what we ended up doing in an effort to get long is find some sort of floor in the midst of the sell-off to build a long position at. And what better a position than an area between the Darvis levels here. You can see, actually, I have it written down, just kind of taking advantage of the psychological level at 24/7 and some of the Darvis levels in front of that. So it created a zone. And a 30-point zone isn't a wide zone, but you'll notice when this trade did finally trigger. And a lot of times when I trade, intraday trade, the close, I think a lot of people think the close is all about, 4 p.m. Eastern or maybe 4:15 Eastern. And for me, it really is more about what can I take from that Asian session and then go forward. What can I take? Because really, as the U.S. session closes, it's the pre-Asian open. So what can I take in that end of the U.S. session and then into Asia and then even into the next day? So it really is about that 24-hour mindset. So we got this buy here, and, once bitten, twice shy, right? I don't think we were bitten, but gosh, it was some crazy market move we saw in the open. So we wanted to at least be ready for that kind of reaction again in case it happened at the 9:30 open. And it didn't, right? So we preemptively took a little something off the table. We did not get flat. We scale out. So when I say take a taste or take something off the table or pay yourself, it's really about how can I scale out 1/3, maybe 1/2 of my overall position in front of a level that I think could give us some problems, in this case, 24.8. And then we keep riding the trade, what's left of it, that smaller position that's left, maybe again, it's whatever remains, 1/2 or 3/4, we continue to ride that throughout the day until it's no longer valid. Now, one of the transitions we'll make is going to shorter term 5 and 15 minute time frames, saying, look, if these are the stairs that the market's going to climb, if the market's going to climb these stairs, when they finally tumble, what a visual, right? But when they finally tumble, that's when that trade is over. Now, how sensitive you are to that is going to dictate whether or not you're looking at a 5 or whether you're looking at a 15-minute time frame uptrend. And then, how much you're willing to let the market wiggle around before it tumbles. Now, normally before the tumble, you'll get a great visual heads up, like a blue grab candle. Now, I'm not willing to take this market short into Asia, although it is rolling over really nicely. And possibly tomorrow, would I be willing to refire this area down in here? I probably would. But I also know, even if I were to refire down in here, we've got tomorrow's Friday, Christmas is Monday, and then we end up with that very strange week between Christmas and New Year's. I would not be surprised to see a little bit more Santa rally. Would not be surprised one bit. And then we'll see the January sell-off. So we might have one more shot to the upside. So if I can build a long position, maybe not tomorrow, but in between Christmas and New Year's, that may not be a bad place. Let's keep that in mind. But today, again, looking at managing those positions from a low, managing them with oftentimes shorter term time frames so we're more sensitive to the rollover. And then in that way, we either have a kind of a trailing stop trade, which is one of my favorite ways to look at this, or we have just a very, very aggressive management approach to the win. I'll see you in the next update.